Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, there's never a dull day in the markets, is there nowadays? And today was no different. We got a bunch of headlines, and it was a very weird morning to say the least. What started off as a beautiful pre-market session, take a look at this very nice rally in the overnight session, was quickly undone as soon as the opening morning bell struck. Now, what happened early this morning is, number one, we had a few big headlines in relation to big tech. The first one, of course, at the open was this massive news headline on Google. The Department of Justice pushing for Google to break up and pretty much divest its Google Chrome browser and possibly wanting to keep Google out of the search game for the next 5 years. And the action didn't stop there, guys. Roughly an hour after that, it was Amazon's turn. Amazon likely to face investigation under EU tech rules next year, sources say, as the EU continuously seeks to crack down on monopolistic practices. And thereafter, guys, the session got even more interesting. NVIDIA, which at a first glance was negative after their earnings, actually flipped positive over the course of the morning. And that was a very welcome relief, especially for their sector peers in semiconductors. And of course, guys, we got to talk about it. Bitcoin almost coming up to the $100,000 mark. So there was a ton of action in the markets today. The markets were largely green, but held a little bit back by those negative big tech headlines. So in today's video, guys, a lot of things to cover, of course. Number one, we will be going over the major stock market indexes in terms of technical analysis, see where we stand after this bull's beautiful bounce out of our support zones that we've been monitoring on the SPY and the QQQ. Thereafter, we're going to take a look at the destruction that was happening in big tech names today and see if we can maybe find any good levels to be basing some trades off of. And lastly, guys, well, of course, we'll be looking at the news headlines from Google and Amazon, but we'll do those in their respective sections. And I will wrap it up with a quick little recap on some of the swing trades that I've been presenting on the channel and see how those are doing, and also see if some of the opportunities have not ran yet and maybe they still do represent some good buying opportunities. So a lot to cover in today's video, guys. Let's jump right into the action. No portfolio update for today. I will show you a few trades here and there, but the full recap of the portfolio, of course, will be coming tomorrow after the close. So let's jump right into it. SPY up a very healthy 0.54%, bouncing nicely. The QQQs as well, but the QQQs were held back by one major thing, and that was the headlines affecting Google and Amazon. Apple and Microsoft were down as well, and for a good portion of the morning, NVIDIA was also in the red. But take a look at the rest of the market. The rest of the market was on fire today, guys. Very nice broad market performance, and once again, reiterating the notion of rotation, right? When we have the very biggest names in the market having a bad day, is the rest of the market there to kind of pick up the pieces and hold up the strength in the SPY? And today indeed was the case. Defensives having a very good day. Software as a service companies having a very good day there as well. Other companies down in this list too, coming up very nice, multiple percentage points. CRM being a big winner there. Financials having a good day, continuously breaking up to the upside, whether it's credit cards or the banks, everything was good there. Healthcare as well, with finally a very nice bright green day, except of course for Eli Lilly, which continues to struggle with the headlines from RFK. And the bottom half of the market, guys, industrials, real estate, utility, energy, basic materials, everything was up. So overall, a very nice broad market performance from the bulls today after a very tumultuous last 2 weeks of trading after the kind of post-euphoria of the election wore off. Take a look at the one-day relative. You will see that everything was pretty much green except for communication services. Very logical. The two biggest names in communication services were red over the course of the day today. But other than that, a very nice performance. And with this big green day, we have now kind of reversed a little bit of this mixed market into a leaning bullish positioning over the last 1 week. Utilities, energy, basic materials, real estate, some of the biggest winners there. To the downside, technology still a little bit mixed, especially after today's big drop in big tech. Communication services, healthcare, and cyclicals to the downside. So all in all, guys, fairly happy with today's market performance. Hopefully you were able to make some gains depending on which stocks you were trading. And before, actually, no, I'm so used to doing earnings right now that we're literally going to jump right into the technical analysis portion. So going to make this video a little bit shorter than usual. So thank you guys for your understanding. So moving into the SPY, moving in the technical analysis, right, of the indexes, you'll see, guys, that not much has changed, right? Yesterday's video, I do admit, was a little bit clickbaity, and somebody called me out in the comment section for it, and I do respect that. I put out the headline that NVIDIA earnings were selling off, and is it a potential market top? Now, if you watch the video, that wasn't necessarily my opinion. I was just saying that a lot of other people, and whether it's the media or investors that you can find on Twitter or on YouTube, a lot of them were kind of hinting at a possible market top, and we were kind of diving through the charts, diving through the analytics to determine whether or not that was the case or not. And I took a pretty firm stance in saying that no, I don't believe it's the top of the market. If anything, we probably have a very nice window of opportunity here over the next 2-3 months. Any recessionary data, in my opinion, will be a lot more obvious come possibly in January, February, and March, when the Federal Reserve has more data. If you see a few months of uptrending inflation, if you see a few months of uptrending unemployment and lower jobs reports, right? We need more than one report to establish a trend and start to get a little bit nervous and change our positioning. So until that happens, until the February cycle as well, that is going to be key company earnings. We get all the guidance for next year. Are corporate profits dwindling in this Q4 right now? Will companies be doing layoffs? And will that lead to a potential unemployment crisis in the US markets? I think that the most of the recessionary data will be very clear front and center come that time. But as of right now, you guys know my stance. I'm cautiously optimistic. Are there a few red flags? Are there a few cracks here and there? Absolutely. But do we have an indication that the economy is about to fall off a cliff and that we're about to have 6, 7, 8, 9% unemployment? No, we don't have that data just yet. And I will remain data dependent on the channel and try to be as objective and as neutral as possible. But for now, I'm just following the flow of money and the overall narratives at play, and those still do indicate that this market does probably want a little bit more to the upside to rally into the end of the year. We also have bullish seasonality coming into play for the last roughly month and a half of the year. So I am going to try and ride the markets into the end of the year, but I'm not going to lie to you guys. I will get a little bit more cautious, a little bit more defensively positioned come possibly early January, especially into February as well. So moving into the technicals, guys, that being said, the daily bulls are looking very healthy, very strong. Daily uptrend is now confirmed. Our daily higher lows are set, and the bulls are looking to expand on this daily uptrend. Now, keep an eye on these lows right there, guys, because if for some rich reason we turn around this entire move and flush the lows, you'll end up with a daily downtrend and you will end up with further weekly consolidation. Good thing for us. Who controls the weekly timeframes? It is definitely your weekly bulls. They would just be looking again for a weekly higher low for further trend continuation. So as of now, the markets are not looking too bad. We have some broad-based rotation all across the board. And an evidence of that broad-based rotation is the percentage of stocks above the 50-day moving average. You can see the last few days, it has been curling up. There is still 58% of all stocks that are above the moving average. Definitely not showing signs of the market wanting to pull back in a hard way. That would be an indication when we pull back down into the sub 50% range. Also, percentage of stocks above the 200-day moving average is also at a very healthy read of just around 60%. Not around the highs that they were just a few short weeks ago, but obviously not showing major signs of problems during which you can see some heavy periods of consolidation. So I will pay special attention to the rotation in the markets, but as of now, it does show that everything is still relatively healthy, right? We got healthcare back. Semiconductors are slightly back as well. So all in all, no problem for the rotation. We'll get into those indexes in just a few short minutes, but let's first tackle the QQQs. So QQQ analysis is largely the same. We were looking for the bulls to find a local bottom and go for the daily uptrend continuation. Seems as though they are well underway, and the hourly time frame does indeed show that as well. An hourly uptrend has been recaptured now, looking for the continuation of that. However, if over the next few days we get negative headlines, possibly escalation of the conflict between Russia and Ukraine, or any other volatile news event that can possibly impact these markets, and we flush the lows here down at about 495, the daily downtrend is underway, and you will seek protection from your weekly bulls who do control the uptrend right now, right, with a decent amount of space. Anything at this point above, let's call it 484, is just going to be looking for a weekly higher low for further trend continuation. Seems as though they want to continue that trend as of right now, but we will of course see how those weekly candles close in tomorrow's session should give us a better indication into what's going to happen into next week. Moving into XLF right now, XLF finally getting a new leg to their daily uptrend underway by cracking the all-time highs, looking very good at this point in time, guys. So daily bulls in full control right now. We're going to look for the continuation of the expansion, and as soon as the expansion is done, looking for a daily higher low for further trend continuation. If they give it all back right away and roll over, it does open up the door for the daily downtrend rollover. However, just keep in mind who's in control here of the higher time frames. It is your weekly bulls, and it's going to take a lot of damage by the bears to undo this weekly uptrend right now. Look at all this space, guys. Anything above 46, looking for a weekly higher low for further trend continuation, which is why I held a bullish bias in the one financial name that I was looking at and publicly not promoting, but kind of just saying that I like this for a swing trade opportunity was Berkshire with this sideways consolidation, right? Berkshire known to sometimes put in a big gap, move higher, gain a level, then consolidate, right? Same thing here. Big move up, gain a level, consolidate, and then eventually, if they do hold on to the shorter term moving averages, usually it can represent a decent buying opportunity, provided the rest of the markets are also in weekly uptrends. Sometimes you got to be a little bit patient with Berkshire because obviously it's not NVIDIA, but that one is doing fairly well right now. Moving into XLV healthcare right now, healthcare with its third day of bounce underway, 0.8% to the upside, so very good day there. However, we need to understand that we are still in the context of this big daily consolidation and of course in the context of this big weekly downtrend as well. That being said, there are a few names that I'm interested in playing, and I'll take a look at them in just 30 seconds. Just allow me to do this analysis first. So what we're looking for here, guys, is the size of the bounce, of course. We know that above us is this big area of resistance. As a matter of fact, let me put this into a red zone just to not offer any confusion here. Just to be clear, so we do have big resistance above us. That being said, we are looking for the size of the bounce. Now we know the daily bounce is underway. If you want the bulls to be able to recapture a lot more of this weekly and reset the weekly uptrend and send us into another monthly leg higher, well, the first things first, they need to get the daily uptrend back. So we need to know what are the chances of that happening. And for that, we use the fib retracement tool. So that being said, if we do pull back up to at least 50%, or the 618, that gives the bulls a lot of space to then set up a daily higher low for the daily trend change. Because at this point in time, the full V shape is somewhat unlikely, especially with the size of this move. So at this point, we're going to look for them to pull up at least to about 145, all the way up to about 147. If they can do that, they create a lot of space off the lows, then they can possibly set up for the daily uptrend formation. And when we have the daily uptrend confirmed, you know that your weekly bottom is in and that the bulls are most likely going for a weekly trend change attempt as well. So the bulls still have a lot of work ahead of them, but some of the names that I'm looking into more closely are AbbVie. I absolutely love this company, and we are currently in a nice zone of support, 165 down to about 155. So if AbbVie continues to be a little bit weak, I will be looking to maybe play some short puts as part of the wheel strategy in this gorgeous support range, which was prior all-time high resistance from all the way back here in 22. They use it as support again, and very nice monthly support coming up for, the second time in about 6 months worth of time. Moving into semiconductors right now. So semiconductors getting a little bit of a lift from NVIDIA, even though NVIDIA didn't do most of the heavy lifting today. If you take a look to the left or right of me, depending on how you're looking at the screen, right? Well, I'm mirrored, so it makes a difference. So the rest of the sector was doing a lot better than NVIDIA today, but there was an overwhelming sense of relief in the markets after NVIDIA's earnings. That is definitely for sure. And I think the sector needed to hear from NVIDIA, the market leader, that demand for the AI products was still extremely, extremely strong to the point where NVIDIA cannot even keep up with the supply. That being said, it did wonders for the SMH index today. So as a whole, guys, we still are in this big daily consolidation mode. And now we know that we've been trapped between these two levels, 237 down to about 226 support with the 200 daily EMA down there. And to the upside, we got the 260 down to about 251. So it's a tale of being trapped between two locations, and the weekly chart displays this even better. It's just largely been sideways consolidation now since the month of September. So what the bulls need to do is we need to get a very big bounce underway. The bounce size as of now is not so adequate, only a 38.2. I would like to see them come right into this resistance zone, give us a lot of space from the lows and then go for the daily trend change attempt, as they kind of put in a few times but could not get it done, right? So we'll see if they can get it done this time, and also as a consequence translate into a big weekly engulfing move push, because we know one thing, guys, the semiconductor industry is just looking to consolidate sideways, right? This is a 6-month bull flag at this point. Sideways consolidation without giving back too much of the move. We might be looking for an extended rally, maybe coming in the month of December, maybe even into January as well, because we know a lot of these companies' guidance has been for the end of 2024 is going to be a little bit transitional for them, but they should be having a very bullish outlook as all of 2025 should see sector growth come back to semiconductors. So I'm still very bullish on this one, but I remain playing the most favorable names right now, NVIDIA, TSM, and AVGO, and I still really love playing my short puts on all those names on big drops. So those are the opportunities that I'm looking for currently in semiconductors. Moving into the Russell. So the Russell putting in a very nice day today, 1.52% to the upside. They are almost as high as about 2% before kind of pulling back, a little bit of profit taking into the end of the day. But I liked what I saw here. Hourly uptrend is now recaptured by the bulls, looking to maintain this. And the whole time they have it, we are looking for the expansion of this new daily leg. Now, I'm not going to lie, guys, this pullback by the bears was very aggressive. They pulled back all the way to the 618 mark. So at this point in time, guys, the V shape is possible, but not very likely. A more likely scenario, in my opinion, would be maybe somewhat of a 2-step recovery process because of how deep this leg cut down. Now, that being said, we are still acting in a very nice support area right now, which is the prior support range from 2020 and 2021 highs. You can see the bulls have been using this on the weekly time frame, and we still do control the weekly uptrend right now. Looking for the weekly higher low at this point, anything above 217 is just that. So can we get a nice bullish weekly close on the Russell and continue into next week with momentum? Yes, we can, but just be aware, guys, that it may not be in one clean shot. We may have to just 2-step this. I like the Russell leading into the end of the year, but I'm not oversizing my trades into the Russell. I'm still being relatively conservative, and it does not represent a large portion of my portfolio. Moving into the Dow Jones right now, the Dow Jones also looking quite good in terms of a technical setup. We were looking for the daily higher lows, found them just a few short days ago in our support range, 43,000 down to about 42.5, and I was saying that this was maybe a good opportunity for a little bit of a swing trade on the Dow Jones if you're the type of person to like to play the Dow Jones futures. That being said, why did we have a bullish bias for continuation? Well, quite simply because the bulls never lost even close to the weekly time frame, right? We're always just looking for a weekly higher low for further trend continuation, and we bounced very nicely in this zone. So I don't see any red flags on the Dow Jones. If anything, even if we roll this entire move over, guys, we would still just be looking for a higher low, anything pretty much above 41.6, just gonna be looking for that higher low for further trend continuation. But as of now, no major red flags for the bulls in most of these major sectors. So everything is looking quite good. We will do a full sector recap tomorrow on the Friday session, but now we're going to keep it a little bit short. Tomorrow we'll also tackle yields because yields and bonds haven't moved too much as well. What I want to get into right now, though, is Bitcoin. Bitcoin looking excessively strong right now, and we know we've been overbought on the RSI largely since the post-election move, which was a crazy rally to say the least. That being said, who's in control of this move right here, guys? Definitely the bulls. We were identifying this consolidation as somewhat of a bull flag, right? Illustrating all the characteristics of a classic bull flag. After a very large rally up, the bulls didn't want to give back too much at all. They were maintaining their strength, trying to stay as close as possible to the high of the move to retain momentum and possibly go for the infamous leg up to the $100,000 level. We didn't quite get there today, but it's very likely if the momentum continues that we will get there in the next few days. So looking very good for some continuation. And in the event we have a little bit of a pullback, guys, we would just be looking for a daily higher low at this point. Anything really above 88,600, looking for a daily higher low for further trend continuation. Decent support now formation down here, and the 12 EMA is there as well. So that will be a short-term support level for the bulls. On the weekly is looking very good for the trend expansion, guys. And I kind of gave it away when I told you guys about the MACD cross all the way back here prior to the election. First weekly uptrend in 6 months worth of time, you have to pay notice to it. first MACD cross in 6 months worth of time, you have to pay attention to it, right? It is worth at least a little bit of a nibble, at least a little bit of risk on to probably capitalize from this move. And the move so far has been very good. So congratulations to all of you who were able to make a lot of money from Bitcoin in the most recent leg up. The weekly bulls are looking very strong, but until we lose any form of daily uptrend, I would not say that weekly consolidation is a likely scenario at this point. So Bitcoin looking very good. Ethereum really coming alive as well. And this entire altcoin list now is coming alive as well. We haven't done Ethereum in a while, so let me spend a little bit of time on it today. Ethereum, big move up, then consolidation. We never really lost a daily uptrend though. The bears tried to flush for the lower lows and set up the daily downtrend, but they got stopped out double bottom. And now we have the bulls back on track. On the weekly, what does this look like? Well, the weekly is still looking very nicely in terms of a just continuation of the weekly uptrend. The current resistance level stays put at about 3,500. And of course, beyond that is the all-time highs at around 4,000. So Ethereum is looking good. But as I've said many times before, guys, because Bitcoin dominance is so high right now, right? Bitcoin is really leading every single move. And whenever Bitcoin drops down, some people expect some altcoin rotation, but that has not been the case so much so far. As a matter of fact, over the course of this entire last 2 weeks worth of rally, I can maybe count on one hand, the amount of time where Bitcoin has been flat or slightly red, and you've had a massive rally in altcoins. For now, everything still seems to be following the Bitcoin momentum, essentially. It's just that sometimes you get some outsized moves, right? When Bitcoin moves up 4%, ETH moves up sometimes more, and the altcoins obviously move up a lot more than that. So looking very good on crypto as a whole, but keep Bitcoin as your guide currency. If you do have a pullback on Bitcoin so far, it is usually translated into a pullback in altcoins just the same. Can you find a few exceptions here and there, guys? Of course you can, but largely that rule has been something that I've observed to be respected in the most recent last weeks of trading. Moving into our big tech names, shall we? So Apple down about 0.21%. No big tech lawsuits for Apple. However, before we get into the Google headlines, before we get into the Amazon headlines, I just want to show you, maybe you guys remember when I bought call options on Apple down here. Do you remember what the sentiment around Apple's brand was back then and why they were unable to rally even though the rest of the market was on an absolute tear through the early months of February, March, and April, and Apple was just not participating in any form of rally? You guys might remember, some of you guys who've been around on the channel for a while, you guys remember this list? I kept it there for a reason, right? You guys remember all of the temporary issues why Apple wasn't running? $2 billion European Union lawsuit. There's Amazon's, right? Department of Justice lawsuit. There's Google's. 5 out of 6 quarters of flat revenue growth. China slowdown in competition, Vision Pro's too expensive, lack of phone innovation, Warren Buffett selling, he was selling as a matter of fact, and the AI is underwhelming. And I was telling you guys, if you're a trader, of course you have to pay attention to these short-term catalysts. Very tough to position into a long, especially on the weeklies, if you're not getting any turnaround in these. However, if you are a long-term investment, you should be focusing on the long-term competitive advantages of the company and the company's moat, which is why I was saying that back here, when we had all those issues, especially with the technical levels as well, being at big support, probably a decent location to start bidding the stock into established support level while sentiment around the brand is at relative lows. And that one was a very good trade. Do you guys remember another one where sentiment around the brand was somewhat soured and where they kept getting Department of Justice headlines, European Union headlines for about a month, 2 months of time? Well, very simply, you just have to remember when I kept calling out Visa and MasterCard after 3 months worth of consolidation. I was giving you guys a bunch of technical levels, but I was also saying to focus on the quality of the company and the long-term competitive advantages of the company. And you remember us on the channel, a few of you have made decent money on this trade already. You guys remember when I kept proposing Visa and MasterCard as a swing trade opportunity down there? And the rest is pretty much history, right? Because eventually the short-term catalyst, the short-term negativity will eventually blow past us, right? And people will once again focus on the long-term fundamentals of the business at hand. So that's why those trades are sometimes very good trades when there's a lot of negativity, negative sentiment around the brand, a lot of headline news as well. If you have high conviction in a stock, you know, it's one thing. I'm not trying to convince anybody to invest in anything, guys. I'm just trying to show you guys how I position, how I use some of the news negative headlines to take positions and profit from them. Most oftentimes it works, especially on high quality companies, but other times it doesn't, right? So you have to kind of take these things. You have to take what you hear not only from the media or from people people that do these types of videos such as myself, and come to your own conclusion whether or not you're comfortable in investing in these companies when times are rough. And I completely understand it's not the easiest thing to do, right? Because you think those negative headlines are going to last forever, and you think Apple's best days are behind them and that they'll never rally again, right? But sometimes for certain companies, the risk to reward profile becomes more favorable than not. There's always risk. I'm not going to say the risk is eliminated, but I'm talking about the risk reward profile. When the risk reward profile becomes favorable, that's when I'm highly enticed into taking one of those trades. So that being said, that's a kind of segue into the future Google that we're going to get into, but I figured I should do it right away while we're on the topic of Apple. That being said, for Apple's technical analysis, while the daily bulls are still in a daily uptrend, we still have not cleared the 230 level. It's been a very big level and a problematic one for the bulls, to say the least, but the bulls do have a nice sign of short-term control right now. The weekly, however, is very, very messy, very tight range. We're kind of trapped between this resistance band, 230 down to about 225, and to the downside, 219 to 215. So my favorite way of playing the range is not estimating for a breakout. If I want to play a breakout, you guys know how I like playing the breakouts. I like to play the breakout, the retest, and then the run. I'll get in on the retest. I'm not trying to play the breakout, right? If I'm looking to play a range, I'm looking to just sell some short puts down here, or if I'm looking for some call debit spreads or something like that, I'll position for them down here. Into resistance, not my favorite trade. That being said, Apple isn't looking bad, but we don't really have a defined trend just yet. So my trade opportunities on Apple are as follow. I will be looking for the breakout, retest, and then run of the range, possible retest entry, or if we revisit the bottom end of the range right here, 219 to 215, I'll be looking to write short puts under that range. If they want to come down and pick me up around 210, I'm perfectly fine with that. But Apple, not looking too bad, still a very tight range, guys. No big red flags, of course, unless we break a major level like this to the downside. Moving on to AMD right now. So AMD, unfortunately not the beneficiary of the semiconductor rally. When is AMD ever a beneficiary of positive semiconductor news? It hasn't been for a while, right? AMD has largely been down for a very long time. Since the month of March, we haven't really had any sustained rallies. We get short-term bursts here and there, but they don't convert, guys, into nice big monthly candles and nice big monthly trend appreciations, right? So now that we're in still a monthly downtrend, we are still in a bit of a, not a weekly downtrend, but essentially to be saying all weekly momentum has been lost. So what I'm trying to say here is the bulls need to start everything from scratch. Yes, we are trying to find a local bottom in the 141 down to 125 range, but the bulls have a lot of work to do, right? Daily downtrend is clear as day right now. We're trying to set up for the daily higher low to go for the daily trend change, but it's not working out too much, right? For that, you need a break of 140.5. Get that? Perfect. We have a new daily uptrend underway. And then what do, guys? We look to the weekly chart. How much of this move can the bulls try to recapture and try to go for the weekly trend change? Until you get the weekly trend change and get a beautiful weekly uptrend, guys, we can't really start to speculate that this is the monthly bottom and that we're possibly going for the actual expansion that everybody's been waiting for on AMD. So the way that I'm playing this myself personally is I am interested in playing some short puts, but only if I can get a really good deal, 130 and below, more preferably towards the 125 region. That I would not mind because the valuation of AMD down there is more than fair in my opinion. However, for now, when semiconductors dip as a whole, I have a penchant to play the strongest names that have not lost the monthly uptrends, right? That for the most part have not lost the weekly uptrends as well. And those three names for me are TSM, AVGO, and NVIDIA. But AMD, if they have a big red day and they give me a golden opportunity below here at great valuations, I will take it, but it's not my favorite one to be playing right now just because it's out of favor. I would rather be patient and wait for a weekly uptrend and sacrifice a little bit of price, right? I'm willing to pay, meaning I'm willing to not buy the bottom here and buy a little bit higher if I can get the confirmation. So I'm willing to pay for that confirmation in getting a higher share price rather than trying to constantly pick the bottoms on AMD, even if we are in a good area of support. So that's just the way that I see things myself. Just because this position, when I do enter it, usually it's a position with decent size. And when I go in with decent size, guys, I want to know that I have larger term time frame bulls behind my back to support the price. Hopefully that makes sense. Moving on to Amazon right now. So of course, Amazon, we need to get into a little bit of the headlines right here. Amazon likely to face investigation under EU tech rules next year. Now, so far, no exact indication of what they plan to do. Right? The online retailer could face a fine of up to 10% of its global annual turnover if it is found guilty of breaching the European Union's Digital Markets Act. Now, so far, Amazon said that it's compliant with the DMA and has engaged constructively with the Commission on its plans since the designation of two of its services as important gateways between businesses and consumers, and thus subject to the new rules. So, a lot of time left before this litigation actually comes underway, or the investigation rather comes underway. But I'll remind you, these big tech names are no stranger to these lawsuits, either from European Union commissions or even from commissions in the United States, such as the Department of Justice as of recently. So once again, Amazon being plagued by one of those headlines, no direct implications as of now, but that was enough to send the stock down roughly around over 3.5%, while the rest of the market was green in the pre-market. In my opinion, guys, headlines like these on one of my favorite companies does represent a buying opportunity, so I viewed it as such today. So we do have a daily downtrend underway right now, and you guys know when the daily downtrend is underway, you have to go to the higher time frame to understand what is happening right here and who's still in control. Well, we know that a fact that the bulls are still in control of this weekly time frame, and we know that since this consolidation has started as of last week, we are only just looking for a weekly higher low. At this point, anything above these guys right here, about 182, is just looking for that weekly higher low. Now, we do have a base of support forming down here at around the 193 to 190 level, so any pullbacks into this region could be a decent little location for a swing trade long if you're looking for possible share appreciation above the 200, into the 210, into the 220s. The analyst price targets for the stock are upcoming at a midpoint of about 235. Everybody's bullish. Great expansion on EPS into next year and great expansion in revenue as well. The company has been a lot more profitable this year than in years prior as they focus on free cash flow optimization, EPS optimization, and driving more and more money to the bottom line. Amazon has never done this in their company history. They've always been a top line growth at all costs company. And now they're kind of shifting to a shareholder value oriented company. So a very interesting page in Amazon's history, to say the least, which is why I'm very bullish on the company leading into 2025. And I will be looking to add to my positions in the event we come down there. Now let's move into the next one, which is Google, of course, right? So Google, same thing. Google has been plagued by these Department of Justice lawsuits, and the Department of Justice actually won the antitrust, ruling that their search business, or their preferential deal with Apple that they have, about $20 billion per year to be the default search engine on Apple's devices, they ruled that to be a de facto monopoly, and now we are seeking for the resolution, of course. So these proposed resolutions today are just that. They are proposed resolutions by the prosecution. So far, the judge in the case has not approved them, and we do not expect a final ruling on the matter from that judge much before April or May of next year. But I will remind you as well, when the judge gives the ruling, Google also has a window to appeal the matters and offer some counter solutions to the matter. But this was definitely a very brutal headline for the stock today, right? In terms of Google, the shares were actually down 6.5%. The Department of Justice pushing for Google to divest from its Chrome company. Not only that, not only are they seeking for them to sell Google Chrome as a whole, thinking that the company can possibly obtain around $20 billion on the open market for it. Obviously, that will kind of sever Google's connectivity, right? The same thing with Apple devices, how they're all interconnected. Well, if you remove Google Chrome as a piece of the Google puzzle, you kind of ruin a lot of that interconnectivity. Now, I understand where the Department of Justice is coming from. They want to facilitate competition. They want to break down monopolies. But is this the best course of action? Well, that is something that we're going to see from inputs from experts during the trial, during Google's possible appeal of any judge ruling. But so far for now, nothing is set in stone, of course. But the news, of course, hit the stock, and it hit the stock very, very hard. For myself personally, if you want to know my opinion on it, as I was saying early on in the video, guys, it's not my job here to convince anybody to invest in Google. All I can say is that I am investing in Google, and that after today's headline, I am buying more of the stock because of the reasons that I described prior. Is there some risk? Yes, but I do believe that right now, at least, the risk-reward profile is favorable for the company. Could I be wrong and Google possibly be broken up, even though I don't expect that personally? Yes, of course. But as I said, it's a risk-reward profile. I'm willing to accept that risk in search of the possible reward if the end resolution is not breaking up the company, but maybe the earlier proposed resolutions, such as sharing some search data with their competitors, sharing some advertising data with their competitors, and kind of opening the landscape to new competition. I think the Department of Justice further targeting Google and wanting to ban them from the search business as a whole for the next 5 years is maybe a little bit of an overstep. Well, not an overstep in the direction of them pinpointing at Google, but if that is the case, I would like to see some fair ground across the board here, right? Talking about search browsers affiliated with ecosystems. Well, if they do this for Google, I'm very curious what they're going to do with Apple and their Safari browser. Is Apple going to have to divest from their Safari browser? I'm curious what they're going to do with Microsoft's ecosystem and Microsoft Edge and Microsoft Bing as search, right? Is Microsoft going to have to divest its Edge browser? Are all browsers going to have to be kept separate? So I think that this case is a very important one. And if they do rule that Google needs to separate that as a precedent, well, obviously there's going to be a very lengthy appeal in the courts, could last up to a year, maybe even 2 years. But if the final result is that Google has to divest from its Chrome browser, well, you would possibly see the same thing starting to affect other companies such as Microsoft, such as Apple as well. And you can kind of push the bar a little bit further and say, well, is Facebook, is Meta going to have to divest from its Instagram business, because there's a certain search portion there as well. A lot of people use Instagram or even TikTok to search through different things, right? The search market is a lot more broad than only a browser, right? You can use search across a various amount of different things. You can even go on Amazon and search for different things, right? So the term search is a very widely used one. When it comes to browsers, we will see exactly what happened. So all that being said, for me, it does represent a buying opportunity, and I view it as such. Now, as a whole, as I said, I'm not trying to convince anybody to buy into the stock. As a matter of fact, if this type of news event makes you nervous as a shareholder, you have a decision to make at the current time. Are you willing to take upon the risk that's currently facing the company in favor of the long-term benefits of investing in a company like this, right? The broadness of Google, the various lines of businesses that they have, the free cash flow that they bring in per year, the profitability of the company, right? All of these things combined, you kind of have to weigh the short-term headwinds to the company with the long-term perks of being an investor. And if ever the short-term headwinds are a bit too much, well, then you might have to possibly revise your investment. For myself personally, I have viewed it as a buying opportunity. As a matter of fact, I did throw a few different things at Google today as just to benefit from the drawdown. So I did write one short put on Google for next week. We went with the 165s on the Googles for $1.12 during the day. And then also as well, I went with at the bottom of the day, when it was down roughly 6%, we went with the 180 calls for March 2025, giving myself 4 months to kind of iron out the landscape right now for about $6. Happy to say that they are up right now, but of course it could be a very volatile next few days, next few weeks, and it has been, as a matter of fact, a very last volatile few months as we continue to march through these headlines. But as I said, it reminds me eerily of the things that were plaguing Apple, the things that were plaguing Visa and MasterCard as well. And those represented buying opportunities. Is this also a buying opportunity? Well, I'm going for it, but maybe this is one of the times where the buy will not be a good opportunity. Unfortunately, we can't know the future right away. I'm willing to take the risk and we'll see exactly what happens, right? I'm not saying to send the entire portfolio into Google, but I at least was willing to nibble a little bit more and add to my positions. That being said, let's take a look at the technicals real quick. So daily downtrend on Google is now clearly evident with the breakdown of today. We do have a nice support zone coming into right now, about 166 down to the lows of 160, where you also find the 200-day moving average. Now, of course, with the daily downtrend, we have to understand that the weekly bulls are losing ground very quickly. It is still a very nice weekly uptrend, but I'd be very careful if we do drop down below 160 and close a weekly down below there. At that point, I'm not saying we're going to go into a massive weekly downtrend and completely flush on Google, but it may take a lot of time to get this one back, right? We know what happens when you get stuck in a little bit of a range without breaking. You end up with a situation like Apple, you end up with a situation like Microsoft as well. So the bulls need to start playing some defense, but if we do come lower and lower into this spot, it's going to be a nice location for me to continuously play the volatility. And for the volatility, I really like writing some options under the market. So that is the strategy that I will continue on Google. Hopefully that was helpful for what happened to the stock today. Now moving on to Meta, give me a very brief moment. Moving into Meta. So Meta down about 0.43%. Not a bad day. By the way, Amazon as well. Forgot to show you guys this trade too. I did take some Amazon after those headlines as well. Took them a bit later in the day, but we went for the 192.5 short puts for $1.15. And those on Amazon were kind of right down here, right in the zone of support that we're lifting out of. So I'm willing to take the risk and possibly be assigned some shares down there. And if ever we bounce, well, I just get to pocket the premium. Now moving into Meta. So Meta also was down a decent amount over the morning, but retraced a lot of it, ending in a 0.43 to the upside, right? So that being said, Meta's not looking too bad, but we know the context is this current daily downtrend. The bears looking for the lower high, moving averages as resistance. So if you get rejected from here and flush the lows, daily downtrend continues, guys. Now, obviously, the bulls need to put in a little bit more of a bounce to get the daily uptrend back. It's not bad so far, right? About a 45-ish% bounce. I need a little bit more, guys. Come up to the 578 level, 618 touch. You'll end up with a decent sized bounce. And the bulls, if they're not able to fully V-shape this, they have a good shot at the two-step process recovery to recapture the daily uptrend and set an end to this weekly consolidation cycle as well. Big weekly consolidation, weekly downtrend. In the event we move lower and lower, you guys know the drill. We have now broken out from this area. So it's the good old, on the monthly time frame that is, the good old breakout of the all-time highs, breakout, retest, and possibly run. So there could be a trade continuation, a trend continuation trade if we find a little bit of a base of support down here, 540 down to 530, and I will be sitting there to take that opportunity myself. As of right now, a little bit too high. I might be getting a little bit too greedy on this one, admittedly. If we come down there, I will be in. But right now, there's a good chance, especially if the indexes push higher after a day like today, that we just bottom out here at the 12 EMA and keep rallying. I'm willing to take that chance because if I do get into Meta, I want to get in a little bit heavy. And so I do want, guys, I do want that extra, 4 or 5% to the downside. It will definitely help when you go a little bit heavier with some longer dated call options or some call debit spreads as well. Moving on to Microsoft. So Microsoft down 0.63%. As I said, guys, today, it was really all of big tech with these two major headlines throughout the day, right? There's a little bit of sour sentiment around big tech today. So that being said, Microsoft as well was putting in a very nice early morning session before we came in to the big drop. As you can see right here, here was the morning. Microsoft with a very nice gap up open. And look at this decline top to bottom, guys, 2.25%. So curious to see what happens on Microsoft. But the technical analysis has not changed in this company for a very long time at this point. The tale of being trapped once again between two ranges. To the upside, resistance 425 to 435, and to the downside, 405 down to 395. So once again, a 10-point range, kind of like Apple to the up and to the downside. So what I continuously want to do is play some short puts. If you have the buying power, of course, because I know it's expensive. Short puts in the lower range down here, 405 down to about 390. Very decent opportunity to be playing the bottom end of this support range on Microsoft. Microsoft's been improving its fundamentals the whole time it's been sideways this year. Their fundamentals have been improving very nicely, which is why I still do think it's a decent buying and accumulation zone opportunity. That being said, even for some call debit spreads, if the leaps are too expensive for you, or if call options are too expensive for you, Microsoft moves slow usually. It's not NVIDIA, it's not Palantir. It's a slow mover, right? So not the best opportunity if you're looking for, the 7-day, 14-day, 30-day calls. But if you're looking for longer duration, like 3 to 4 month calls, slightly at the money, slightly out of the money, this is a good area that I'm looking to build a position in. Not financial advice to you guys. I'm just telling you guys how I play a high conviction stock that I like, high quality stock that's just been range bound for a while. I just accumulate, but I know that Microsoft doesn't move fast, so I put a lot of time on those contracts. But I do like Microsoft. Still a very big fan of the stock, and that is the analysis for today. Moving on to Netflix right now. Netflix continuing to defy the laws of gravity. They actually cracked 900 today flying all the way to $908. We know the context is this beautiful daily uptrend right now, but it's a little bit too high for me to chase right now. We'll be looking for a pullback. Any pullback at this point, looking for the daily higher low. The RSI is quite overblown right now on the daily at about 82, and Netflix is not known to be one of those stocks that lasts a very long time in these heightened overbought conditions, right? NVIDIA is a stock that if you look on the daily, it can stay overbought sometimes for a month and a half on the daily. Netflix doesn't usually have those historical norms, even though they've been performing very nicely recently. We'll be looking for a daily higher low at this point, anything above 809, looking for just a daily higher low for further trend continuation. So a lot of space. And even on the weekly, guys, the weekly is getting a little bit extended for my liking right now. The RSI getting up to about the 81, and 81. I mean, if you go back in the history, right, I'll just put a line right here so you guys can see, usually 81 does sometimes mark a temporary top for the stock. Not saying it can't just retrace and continue moving up higher, but it does sometimes mark a little bit of a temporary top, right? If I zoom in here, I know it's going to be really small and you guys don't have binoculars in front of your computer right now, but if you come into here, right, you'll notice that sometimes it represents a temporary top. This is actually a great example, the same breakout we're having right now. Big breakout, consolidation, and then they go for another leg. So that's all I'm looking for right now on Netflix is possibly just a little bit of consolidation and then maybe another leg higher, but the bulls are looking very, very strong. Congratulations to anybody who's in this one right now. You must be having a very good time, and myself included, because I am a long-term Netflix shareholder. As a matter of fact, I hold, except for AMD, I hold every single one of these stocks in this list, except for PayPal as well. But all of these other ones are all in my long-term portfolio, guys. So congratulations to the other Netflix bulls out there as well. Moving into NVIDIA right now. So NVIDIA doing a good job of recovering from, the earnings volatility, right? Very volatile day on NVIDIA. Started off 2.5% to the upside, then got kind of bundled up with the big tech negative headlines, had a tremendous drop, top to bottom, guys. This is at the open. This isn't even pre-market, right? Top to bottom in roughly, let's call it about an hour, 8% before kind of ending somewhere in the middle, only up 0.53. Very volatile day on NVIDIA, but I did benefit from that opportunity from the early morning volatility. I was in and out of one of these trades very, very, very quickly, guys, right? We wrote the 135 puts almost at the low of the day. You can see right there, 10.15, which is for all intents and purposes, right? The low of the day, well, starting to be around the low of the day, right? Around that 10.15 candle. 10.15 candle was right in this mix right there. So looking pretty good. Didn't quite get the low of the day, but I was quite close. When you're writing these short put options, you're not really looking to snipe the bottoms, right? And I'm not doing calls, just looking to get a good level and some good premium, which we did, 85 cents. And I closed it this afternoon and rolled the money into the Amazons below. So you can see 50% in one single day. So sometimes you can day trade these short puts. Serves me no purpose to stay in these NVIDIAs. These are for next Friday, guys. What am I going to do? Hold the 135s for 35 cents through next Friday? There's no premium on there, right? That's 0.35 divided by 135. That's barely 0.25%, guys, for the next week. And you guys know me, I want 0.5% or better if I'm to hold an option for an entire week. So I took the money and rolled it into the Amazon play, which was providing decent premium towards the end of the session. Hopefully that makes sense. That being said, NVIDIA not looking too bad. So we are still now trying to recapture the daily uptrend, right? They had a little bit of a mishap right here. You can argue that this is one same move, and I can give that to you. At that point in time, just looking for a consistent break, right? We need a daily close above 149.72. Let's call it 150 psychological. A nice break above 150. Daily uptrend is now back in motion. Not looking too bad for the bulls right now. And we know that the bulls never really lost the weekly uptrend as a whole. If anything, we were just looking for kind of a weekly higher low to be in place. And that's why I was targeting the 130 to 125, or if earnings got really bad and the market sell-off today got really bad, as possibly as low as the 119 for the short put applications, right? I wasn't maybe waiting for the stock to come there. It's just that if it came down into the low 130s, something like that, low 130s, high 120s, I would have been okay writing some short puts down here, 119 to 115. So the bulls are still looking very strong, guys, and I would not be surprised, especially after a day like today, a little bit of sigh of relief of NVIDIA, guys, would not be surprised if NVIDIA can continue to kind of slowly gain the levels to the upside and possibly uplift the rest of the semiconductor industry that's been fairly muted for the last 3 months. So we'll keep a close look on this one, but as I said, in the event we were to roll this over, I will be sitting down here to go shopping and also sitting down here to go shopping as well. Moving into Tesla. So Tesla down about 0.7% right now. Not the worst day for Tesla, but also just another flat day. They've been flat all week, right? That being said, no loss of any trends right now, still a daily uptrend, bit of consolidation right there. The one thing, guys, if we start losing the levels like this, it's still just a sideways consolidation, right? No daily downtrend unless we break the 310s. What I think is going to happen if we come below, maybe just a tightening range as Tesla kind of accumulates the levels, because we know that it's going to take a lot of momentum, a lot of power to go up and start cracking the $400 all-time highs. Can they do it? Of course they can do it, guys. It's just a question of, do they have to take a little bit of a breather first, or do they want to launch from here, right? All in all, though, the bulls are looking very strong, and even when you put it on the weekly, guys, looking very strong. It's a beautiful weekly uptrend, and any further consolidation by the bulls at this point, just going to be looking for a weekly higher low for possible further trend continuation and another attempt at that $400 level. One thing's for sure, if Tesla comes down into the lower 320s, 310 area, I'll be looking to write some short puts on the stock down here, and maybe even buying a few call options with a lot of time on them coming into the Trump presidency in the month of January. Not saying I'm a Trump fan or anything like that. I'm just saying, like, that's the catalyst for Tesla, because Trump is currently using Elon Musk as a close advisor, right? So you would tend to argue that maybe a lot of that bullishness is kind of priced in, but I think in or around Inauguration Day, you could also see Tesla respond to this, because we know that Tesla also sometimes likes to act like a meme stock, right? It does go on these momentum rallies. I think that's the next catalyst to really possibly send Tesla. So I will be looking, if we go down here, I will be looking to kind of position with some call options to kind of take that risk, right? Now moving into Palantir lastly. So Palantir not doing too bad today, 1.22% to the downside, but all in all, not a bad day, right? Just another sideways day of action for Palantir as they kind of consolidate into their heightened valuation right now. The key level is below us right now, 58.51. If you see a meaningful loss of 58.51 and a loss of this 12 EMA moving average, just understand that daily consolidation, daily downtrend will be underway, and that's not a bad thing, guys. At any point, we'll just be looking for a weekly higher low for further trend continuation, and I will be looking to shop for Palantir. If we make it down perhaps into the mid $50 range, I'll be looking to go shopping in the low 50s, even high 40s. The volatility on this stock is very, very good, so any pullbacks, in my opinion, will be for buying. We know that Palantir can do this, right? Go on these very nice moves and then pull back for a few weeks, very nice moves, and then maybe sideways slight pullback for a few weeks. And that's all I'm kind of looking for here, guys, is a slight little pullback for a more manageable entry, right? I don't believe the risk reward is very good up here. Even if it can go up to 70, right? The risk reward is kind of equidistant. At this point, if we pull back to the 12 EMA, which is a likely scenario, it's done it many times where they've either waited for the EMA to catch up or pulled back right into it. So I'm waiting for that. And for that reason, the risk in my evaluation is this much. And the upside in my evaluation is also this much to 75. So it's kind of an equidistant risk to reward. So I need for the risk to reward profile to become a little bit more favorable for me. And that's why I'm currently waiting for a dip buying opportunity. But I am still a long-term shareholder for Palantir, guys, and still very bullish on the company. Congratulations to the bulls for really holding their ground at these all-time highs. Looking very good indeed. So that's pretty much everything for today, guys. It was a very good session in terms of the Discord as well. A lot of gains were made today. We threw on some hedges for the NVIDIA earnings, and happy to say that the hedges also went very well. This morning, the little dip opportunity on a lot of big tech was allowing me to close the hedges, some at some profits, some at a very small fractional loss. And by the end of the day, that was a good thing because everything we had hedges on rallied tremendously further. We also made some day trades there as well. So that is pretty much everything. Quick little recap on the companies that we were looking for. Elf Beauty, I apologize for not talking about it yesterday, but I did play this one in the Discord yesterday at the peak of the short sell report sell-off, right? So essentially, if you're not in tune with what happened, well, there's a short seller report that came out on Elf Beauty criticizing their inventory processes, criticizing a revenue discrepancy, basically saying that their accounting was fraudulent, right? Not recognizing inventories properly, not recognizing revenues properly, not fully divulging how much they actually pay for customs and importing their goods from China, and maybe not telling the full truth about how they could be affected by tariffs. There were some very heavy allegations. Well, happy to say that the company this morning came out and basically refuted all of those claims. I won't be getting into them in detail, but the one thing that we did have here was the setup that I've been talking about on the channel for a while, right? Is the weekly breakout, retest, and run. Now, I was not expecting the short selling report to be the catalyst for the retest. We were looking for a slow pull down into prior resistance, which is now support, right? And even with yesterday's candle, although it did come down into here, the pattern kind of remains the same, right? So I was able to benefit from that drop yesterday on Elf Beauty. As a matter of fact, we pretty much sniped the bottom. We got the $90 puts. They did go a lot more, but you can see here when it came out, I was not shy with it. I went with 1 week at a time for $1.50. I already had some Elf Beauty 112 short puts for this Friday, and I did not mind taking assignment. So those I was able to close on this morning for 90% profit, guys, in one single day. Looking good there. I still have the 112s expiring tomorrow. We'll see whether or not I get a sign, but this one I do still like for a swing trade. I think the company has a good competitive advantage in the fact that it pays low overhead. It has a very viral marketing strategy on TikTok and social media. So using those social levers very adequately, low overhead. They don't have physical stores as well. And I think they have a lot of customer loyalty as well. They do very well with the younger generation. So I think this one has a lot of secular trends behind it. And the valuation down here in the low 120s down to 100 is fairly good. So I still do like this one for a little bit of a swing trade, or as I'm doing, writing puts down here and benefiting from the volatility. Another one that's doing well recently is Coca-Cola. I've been talking a lot about Coca-Cola in the most recent few days, actually for the last 2 weeks, saying that it's been a long time that I've seen Coca-Cola this oversold for this long. As a matter of fact, it eerily reminds me of last fall. Take a look at these charts. They almost look the same, culminating in huge daily oversold conditions, and then we start to get a little bit of a bounce rally. Couple that with the fact that we were coming into an area of a monthly breakout retest of prior resistance, which is now support, and you have the opportunity for a decent risk to reward trade, right? The profile was quite good, so I was saying there is an opportunity down here, and we did buy some calls. I was a little bit early on the call options, admittedly, but didn't add to them. For me to add to them, I want to see the confirmation of the daily uptrend, right? So I'm willing to sacrifice a little bit of price to get a confirmed level and then be able to place a firm stop loss below that level. And then we're going for the trend expansion into weekly recovery. And the price target is up here around 68.70. It can take some time because Coca-Cola is a slow mover, but that was another opportunity that I voiced on the channel. So if you guys are able to get in at the lower levels, it's looking quite decent right now. And so hopefully you guys are able to make a little bit of gains on that one. And of course, the other one that I brought up earlier in the video was BRK. BRK is looking quite good for the breakout retest and run on the daily. We covered it earlier, but essentially this was a consolidation move, accumulation phase into possible rally because the bulls never lost the higher time frames. It was a monthly uptrend, and every time they consolidate for a few months, usually find a local bottom and usually are able to put a nice little leg, right? Berkshire has done this for like literally the last year and a half. So it was looking quite good to take that risk as well. A few other names that I like playing for the short puts on a weekly basis. Uber's been consolidating here for a very long time, since April. I love the high 60s, even into the mid 60s for a little bit of a swing trade, both for short put applications and possibly even some shorter duration long call options like 3-4 months or some call debit spreads. Airbnb is another one that I'm very closely monitoring for a weekly higher low for possible expansion. We know that some sector peers of Airbnb have been doing extremely well. Look at Expedia Group, look at Booking Holdings. Booking Holdings has been doing fantastic. The best hotel brands in the game, Marriott and Hilton. I'm not saying they're the best hotels. I just feel that the business models that they run are the most solid in the industry, running the franchise model, kind of like McDonald's, right? So all of their sector peers are running and Airbnb is not. So I think that there may be a little bit of lag here on Airbnb. And that's why I think there is a decent swing trade opportunity, like 130 down to about 125, if we can clip into that for possibly a rally to the top end of the range right here, targeting maybe 145 to 150. Decent little swing trade profile. So those are just a few of the swing trades that I've been looking closely at or that I'm already in. Obviously, there's many more, and I give you guys a bunch of them on the top 5 options plays on the Sunday sessions. And also when I do my portfolio recap, you guys can see all the current trades that I'm in as well. So I try to bring you guys a lot of fresh ideas on any given week. So hopefully you guys, if you guys aren't possibly taking them directly, I never advise people to copy trade me. These are all just ideas, right? Hopefully, at least maybe if you don't like that company, maybe it gives you an idea for another company and you find a trade opportunity there, right? Just trying to help and provide some insights as best as I can. So that being said, guys, that's pretty much everything for me today. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday through Friday after the close. And lastly, guys, if you have any questions, as usual, always feel free to leave them down below in the comments. If you want a second opinion on a stock, an options play, I'll do my best to provide some insight without it being financial advice, of course. And in the event that you do want to join the Discord and get all these trade alerts real time throughout the day, right? We have a lot of, these are all the weekly recaps from all my trades prior since I started the Discord. The green checks are wins, the red little things like that are losses. These are assignments, most of which we've always gotten out of most of them, except for 2 at a profit. The other ones we close at a tiny loss. And so, if you want access to all of these trades, whether it's the wheel trades, so writing options, shares and call options, leap call options, long-term investments, long-term portfolios, the lottery trades, all the ideas, the private morning live streams, Monday through Friday for an hour and a half, sometimes 2 hours we went. Today we did 2 hours and a half, guys, because it was such a volatile session, a lot of live trading. So if you want all that and plus have access to, of course, the chat channels, if you guys want to ask me your questions on your stocks, your options in real time and get my opinion with some chart analysis and everything like that, well, the link to the Discord is down below. So hopefully I see you in there soon if you're interested in such a thing. And if not, I guess I'll see you back on the channel, guys. So take care. Have a great rest of your week on the Friday session tomorrow. Hopefully your trades go well. I'll be with you tomorrow after the close. Take care and peace.